Hey everybody, Jeffrey Beamer here, senior investment strategist over at ewotrading.com with your pro trader tip of the week. We are talking about gaining an edge in the markets. Now, there are many tools out there that help you gain an edge, and you always want to have an edge anytime you place a trade, or at least a positive expectation of positive results. Okay. So one thing that we do here at EwoTrader is that for all of our subscribers, I generate a document each and every week that highlights earnings of the week. And these earnings are in stocks that we think are going to make big moves in the market and stocks that we think are going to make quiet moves in the market. So you're taking a look at the document now. On the left-hand side are stocks that we think or that I, through my research, believe that are going to make moves greater than 10%. And on the right-hand side are stocks that are probably going to consolidate and be quiet through their earnings. And mostly, these are big names, as you can see: McDonald's, Coca-Cola, Marriott, Cisco. These companies are big companies. They've been around for a long time. But as we go through the document, this document is really designed to give you an edge. We're looking at the quietest of stocks and the most volatile of stocks. So this was published for Monday, February 9th, just a couple of weeks ago, for all of our subscribers. And if you look down on the left-hand side here, you'll see Twilio is listed in the column for breakout candidates anticipating a move greater than 10%. Okay, so let's go over to our trade of the week here. I want to highlight Twilio for you because this was a stock that we published through our Delta Neutral Breakout publication. The trade ID is 1425. This was a long strangle. All right. And we published this on February 13th, just ahead of earnings. The stock, as you can see, when this diagram pulls up, here you can see the stock was actually making some nice consolidation action going into the earnings announcement. We put out the alert for the strangle. You can see here that we bought the February 21st 148 calls and bought the February 21st 143 puts. The net debit here was $1,318. That's $13.18 in option language. Okay. And we are anticipating a big move for the stock. Now, I do like this consolidation action going into the earnings because this is just like everything's getting compressed and then just ready to break out either up or down. That's the thing. You can see from the risk graph here that I don't really care which direction it moves. I just want it to move a direction. And I have this positive expectation from the analysis I did and provided it for our clients. So if we go to the exit, one day later, you can see here, a little drop in the stock. Look at that big gap down. That was a gap down of over 16%. In fact, we exited the trade while the stock was trading $24.53 lower than the previous day. And that was a loss of 16.65% for Twilio. We sent out the exit alert. The exit alert was to sell the strangle for a credit of $20.28. And you subtract out your debit from that, and that result was a $710 profit. Okay, so a profit of $710. That's a 53.8% return on risk in just one day. All right. So the bottom line is you look for an edge in whatever strategy, whatever publication, whatever you can find to give yourself an edge. And here at EwoTrader, I send out this document to all of our subscribers for free each and every week ahead of the upcoming earnings events. And Twilio appeared right on there. It gave us the good pricing with the options. We executed a nice trade, and the stock performed just as we expected. All right. So that is the trader tip of the day: is just give yourself an edge in trading and make sure you have positive expectation for your trade, and you too can achieve great results. Have a great day.